Hey everyone, and welcome back to another episode of Futures Fever with Apex Trader and Benzinga. I'm your host, Kevin Dubriske, and I'm excited about today's episode. We're going to cover some different types of markets, and I'm going to show you why it's important to trade with an Apex account. And if you stick around, make sure you fill out the link in the comments for a chance to win a free Apex Trader funding evaluation account. So let's get into some slides, and I'm going to share some information and some tips and tricks for getting funded. All right, so guys, what's on today's agenda? I'm going to show you guys how Apex Trader works, why you should trade with Apex, and I'm going to give you guys some live market insights and some trade setups as well. I'm also going to cover some trades that I personally took too, right? Because I want to be able to show you guys that trading is more than possible, and prop firms really give even new traders with a lot of experience, it gives us the upper hand because we're not trading with our own capital. Therefore, we don't have that emotional connection. So let's dive in. So why trade with Apex Trader Funding? Apex Trader Funding gives traders access to funded accounts, removing the need to risk personal capital. We trade with firm capital and futures markets, so we aren't trading any stocks. We're not trading Apple or Microsoft. We're trading futures. So if you trade QQQ, you would be trading the NQ because the NQ is the futures equivalent of the QQQ because the QQQ is the ETF of the NASDAQ, while the NQ is the futures of the NASDAQ. You keep up to 90% of your profits, but you keep 100% of the first 20K you make per account, which is huge. You have zero personal liability, right? So we trade stress-free. The only accountability or liability that we're really trading with is the money we put down towards the evaluation account and the funded account. Other than that, we're not playing or trading with any of our own capital with the advantage of being able to take payouts. Guys, let me know in the comments, what's your favorite futures ticker to trade? Is it gold? Is it the S&P 500? Let me know in the comments. And don't forget, guys, stick around and I'm going to give you guys the link for a chance to win a free Apex Trader account. So it's an efficient way to scale and grow as a trader. I always recommend to people that I like to mentor, if you guys are looking for any type of guidance, you guys could check me out at tradingpioneers.net. I have mentorship programs and also offer one-on-one coaching sessions to sort of help give yourself more accountability and reviewability towards your system and to really refine your strategy. So how does a prop firm work? It's quite simple. The first step is to pass the valuation account, right? So we want to show the prop firm that we're consistent and we have proper risk management. We don't want to be getting funded off of one trade, or we don't want to pass our funded, then hit our payout threshold in a day or two, because that will also run against their rules. Hey, good morning, Kevin. How's it going, man? I like the name. Step 2, get funded. So once you pass the valuation, they give you a funded account. So if you had a 50K account, you hit 53,000. Now you're passed, they're going to reset it and give you a new 50K account, and that's your PA or funded account. And then you can withdraw profits. Guys, just make sure you follow their rules. One of their strictest rules that a lot of people, I don't want to say a lot of people, it's really not that harsh of a rule. They call it the 30% rule. Now, what this means is once you do request your payout, you can't have more than 30% of your total P&L from one trading day. So we'll make it a bit simple. Let's say when you're requesting your payout, you're in profit of 10 grand. That means you can't have a day that was 4 grand or 5 grand because that's above our 30% rule. If your total P&L is 10 grand, your biggest day cannot be over that 3,000 mark. Now, the reason I say this isn't that horrible of a rule is because this is sort of where the consistent traders and the inconsistent or gambling traders have their difference. So there's no long-term contracts, there's flexible rules and scalable opportunities. You could start with one account and you work your way up to 20 copy accounts when it comes to Apex Trader Funding. Now, making 300 a day might not sound like much, but if you were risking a very small amount and making 300 a day across 20 accounts, well, that's really going to start to add up. That's 6 grand right there. So tips for the 25K account, guys, I want to show you guys some tips for the 25K, the 50K, and the 150K account. So the trailing stop on the 25K is 1500 with a target of 1500. So it's almost an even one-to-one risk reward on your trail stop and target. A recommended risk per trade, guys, I would say is $100 to $150. That way, if you do take consecutive losses in a row, it would take you up to 10 or even 15 losses before finally blowing that account. And what that's going to do is it's going to give you a sigh of relief, and you're going to be able to again trade without the emotional connection. Now, for the 50K account, the trail stop and the target start to stretch out a little further. Our target is 3,000, while our trailing stop is 2,500. Not the biggest of differences, but once we get to the 150K, you will see why I mentioned this. So recommended risk per trade on a 50K account would be anywhere between $200 to $250. The reason for this is because then it will take you longer to blow the account with consecutive losses. And again, what this does is it helps us in the emotional aspect of trading, and that will get us to our consistency. Once we're able to trade without emotion, create a system, create a strategy, and follow it to a T, that's when we're able to say that we're properly trading, not gambling. Now, the 150K account, look at the difference between the trail stop of $5,000 and the target of 9,000. That's that's way off when it comes to risk reward wise and what we like to look for. Now, recommended risk per trade on these accounts, I would say anywhere between $400 and $500. Now, if you're looking at a $150,000 account, risking $500 is nothing. But if you're looking at a $5,000 account, risking 4 to 500, that might be a little bit of a lot, right? Because if you take 2 or 3 losses on a $500 on a $5,000 account and it trails down to 3,000, you're going to feel angst and you're going to be a little bit nervous. But because we're looking at it as a 150K account, we're looking at our stop loss with our trailing stop, that really gives us the confidence to move forward. So guys, Apex is running a major sale. They were going to end the sale today, but they extended it. So 80% off, use promo code FEVER, and you get 80% off every Apex account. That's off the evaluation accounts. Now you also get $125 for a one-time PA fee on any account size. This probably is the best sale they're running right now because these one-time PA fees really vary. So sometimes if you're on a 50K account and you want to pay the one-time lifetime fee when you get funded, it's normally around 160, 170. Okay, so we're saving about $50, no big deal. However, when you get to larger accounts and bigger sizes, 150K account, that one-time PA fee is about 220, 240. So you're saving 50%, over almost 50% off of that sale. So great stuff. Use discount code FEVER at checkout. The 150K to 300K evals are all priced down to $297, and that's even before the 80% off. So that brings their highest accounts possible for the evaluations right down to just $60 per account. And I'm going to show you guys the Apex Trader website and show you exactly why this sale is such a great offer. Apex has paid out $423 million since 2022. That's another $12 million since last week when I mentioned that they paid out $411 million. So Apex is constantly paying people out. They're consistent with it, and they are a great prop firm to trade with. Guys, let me know in the comments if you trade with them. Win a free evaluation. So here's the fun stuff, guys. Make sure you fill out in the comments. There's going to be a link for a free Apex evaluation account, and it will be called on Friday, so you'll get an email. So enter by filling out the form below. That's going to be listed right there. Last week's winner, and I do apologize if I'm mispronouncing this, is Avils. Congratulations, you get a free Apex account and you get to choose which size account you want. If you want to start slow, you could do a 25K account. If you want to start bigger, you could do a 300 or 150K account. I usually wouldn't recommend people go over the 150K account mark because that's when the trail stop really starts running against you, and it's sort of more difficult to gauge risk reward and also a bit more difficult to gauge your emotions because of all of this. So let's break down today's markets. Don't forget, fill out that form below for a chance to win. So what we have today, guys, for anybody who is trading futures, we're going to pull up the ES. This is the S&P 500, and this is the 5-minute chart. Now, this morning, I was able to take a pretty nice long position here for just about 10 points on ES, and this is a pre-market trade. Now, the reason I wasn't too confident to hold it longer is because it was pre-market. Whenever we have a pre-market trade on ES or NQ, we're missing out on a lot of volume. Most volume comes into the S&P 500 and the NASDAQ when the New York Stock Exchange session opens. That's at 9:30 a.m. Eastern. So the trade I took here was at 9:10. We still didn't have that open just yet. So we have a supply zone here, and I saw that on the 15-minute time frame. And what I see when I see a supply zone is I want to use that as sort of an area of resistance. So when price moves into here, where a lot of people might be trying to take a long position up here, and if we play our replay system and we turn this and got rid of this drawing, well, not for nothing, this looks like this is going to pump. We're going to continue. We're going to go long. We're going to go towards our open price. But what happens? We reject and we stay range bound. Now, how could we have found this range? Well, there's a few ways. We could use supply and demand like I just showed before. And that would be with the 15-minute. We would look for some type of basing candle and then a move lower. Now, some people call this a supply zone. Some people might consider this as an order block. Whatever you want to call it, we want to find it the same way. It was a point of consolidation. And if we even look left, we see that we consolidated in this zone for quite some time. And then we have our impulse move away from it towards some other area of support or resistance. In this case, it was to a demand zone. So how did I know not to take any longs at this point? Well, not only were we in a supply zone, but at that point too, we were just creating the high of our 15-minute opening range breakout. So with everything lining up sort of in opposite directions, this is a no trade zone. Even though, yes, possibly we could have taken some shorts here, we really don't want to be guessing when it comes to the market. We want to use tools like order flow. We want to know what our technical analysis is telling us, and we want to be able to follow our trading strategy. So I like to use the orb and supply and demand, and I also do like to use the gap fill as well. But if we looked at the gap fill today, and here's a quick trick for you guys too on how to find the gap fill on futures like that. So the first thing we're going to do, we're going to come out of replay mode, and right now we're on the 15-minute time frame. So usually we could scroll back, we could look to see where this is on the 15-minute time frame. So we're going to look for the 345 candle and see wherever it closes, and that's going to be our gap fill price. Now, instead of going back and trying to hover with our crosshair and looking for it, what we could do is we could come down to our bottom right on TradingView, or if you're on a different broker or trading platform, what you're going to be doing is turning off the extended or electronic trading hours and setting it just to the regular trading hours, which is the New York session. Once you do this, what happens is it gets rid of all that extra time in between. So I'm then able to find my 345 candle that much quicker. So this was a huge, easy, quick way to find that. And this ended up working as a key level too. When price opened up, some people like to use the gap fill as a price target. But we see that when price opened right here at 8:30, we were opening on that gap fill. So that disqualified the gap fill of any kind of relevance. Now, I do want to point out, and let's mark out the gap fill from the other day because I want to show you guys a really great trade I wasn't able to take, but I was able to recognize. So here is let's find we're on the 15-minute one more time. We had our 90-minute supply right here, and here we have our gap fill. So here's our 345 candle was green. This is where the 345 candle closed. This is our gap price. So now if I turn my extended electronic or extended hours back on, I noticed the gap fill price lined up exactly with my 90-minute supply zone. And what happened that day? Well, look at what happened. We opened below where I wanted us to. And the reason I mention that is because I use a statistic-based platform like this is called Edgeful. And I would look at the ES, and the price action report I'm looking at would be gap fill. And what it does is it sort of tells me what are the odds and what are the chances of this gap filling. So I see it for session, I'm going to set it to New York, so it's 9:30 to 4. And for this, I'm going to go, instead of standard, I want to go by size, because then it's going to tell me, are the smaller gaps getting filled more frequently? Are the bigger gaps getting filled at all? What's going on in the market? And it also shows me streaks of these gaps as well. So this day right here, I wanted us to open at this price level, because then our gap price would be, let's see, I think it's 0.39, right? 0.38. And when I use my statistic-based platform and I come to buy size, I could choose, well, it has zero point 0.2 to 0.39. And I saw that a gap down, it fills about 56% of the time, almost 60%. So odds are in our favor. But once that size gets a little bit bigger, that's when it really stops filling. So that's why I really wanted us to open up here, but price ended up opening much lower, giving us a larger gap. We ended up finding demand and reversing later that day. We ended up getting that gap fill along with the rejection of my supply zone. So this is a great trade. Unfortunately, I missed it because my trading hours myself are between about 8:30 to 11. So if there's any other moves or anything else going on afternoon-wise, I'm usually not hitting those, and that's okay. We have to be okay with everything in the market. We're not going to win every trade. We're not going to lose every trade. But as long as we create a system that we stick to, that's what will keep us prospering as traders. And the reason you guys see right here, I have the opening price, is because I could use that to my advantage too, to get an idea of if we're bearish on the day or bullish on the day. If we're above open, then obviously the daily candle is going to be green. If we're below the open, then our daily candle is going to be red. And as traders, we don't want to fight that trend. We want to trade with the trend, because the trend is our, and you guys know it, friend. Awesome. Good stuff. So this was ES today. And if we look at the daily time frame, something I've been mentioning to a lot of my clients as well is we're at the bottom of a range. So even though for the past 9 trading days, which would be 13 full days, almost 2 weeks now, we've been selling off on the ES and on the NASDAQ. If we zoom out on our daily time frame, we're in a strong area of support. This is my Trump zone. Now, the reason this is my Trump zone is because look at the date. This is early November. This is when Trump was elected into office, and the market had a strong move because of that, right? So that kept us in our bull trend. If we look before that, we've been in a bull trend. So this sell-off we have right here, me personally, I'm not too concerned until we do get a strong break, maybe below that 5,700. Now, that doesn't mean I'm going to be taking long positions down here, but that does mean I'm going to be a little extra careful. If we'll take a look at the NASDAQ as well, we see the NQ is in more of a downward trend, right? So it's in a downward channel. We're moving lower. We tried to break it here, and we ended up failing. Once we got back within this range, that's when we knew that it would be okay to take some shorts on the NASDAQ, because we knew that we had a little ways to go till the bottom. But now we created another lower low right here. We created some higher lows. I'm going to mark those out. Let's do HL. So this actually right here is the higher high. And it didn't change. Oh, there we go. Perfect. So this was our higher high. And that's a higher high based off of those recent trends. Higher highs, higher highs. But now, once we failed this high, and we could see when we fail it by drawing out our trend line, now we're making a lower high. So once we make lower highs and lower lows like we're doing right now, that puts us in a bear trend. Guys, don't forget, fill out the link in the comments for a chance to win a free Apex Trader evaluation account. If you do win, you get to pick any account size you want. All right, so taking a look at the NASDAQ, right, same situation. If we use our ruler tool and bring it from the top to where we are today, it's been 9 bars or 9 trading days, 113 real days. So it's been bearish for the past 2 weeks. Now, I want to tell you guys something. The best time to buy is when others are selling. The best time to sell is when others are buying. We have to think at some point, if we were on the replay system and we were looking at the NASDAQ breaking out of this range right here, there's going to be a lot of buying participants. We even see volume starting to pick up here too. We could push one more bar forward and see. Look at that. Then big volume to bring us back into our range to sell back off. And that's exactly what we like to look for, is that volume to help with the confluence of direction. And we also use ES and NQ. We want to make sure that both of them are trending together. So NQ started making lower highs and lower lows. However, if we compare it to this high, this was a bit of a higher high. But from our all-time highs, it failed to break it. And if we do look again back at the ES, we'll see the ES was also sort of at the bottom of its range. So it's hard to be a perma bear, they say, at this point. Being bearish up here at the top of the range is great. Bearish on our way down with the rising volume, that's great to continue the trend. But at this point, we have to be careful, we have to be patient, and we have to look at the market and process the information that it's giving us. Now, something I noticed yesterday is that we ended up reversing around 11:15, 11:30. We had a really strong rally. I mean, over 110 points on ES is a huge move. Now, does that mean we're going to have another 110-point rally reversal today? Absolutely not. Every day is going to give us different price action, but that's why it's important to have a solid strategy that we could apply to multiple markets. Now, because ES and NQ are at the bottom of their ranges and buyers keep failing, except for this pump here, they found some support here. But look at this. We come into this support level. This is an hourly demand zone. We held it once to push higher. We held it twice to push higher. But now we came into it, and this morning, this is where I actually did take a few scalps. Like I mentioned earlier, I took a pre-market long right here. It's a pretty small trade, nothing too big. I do believe it was like a 3-to-1. Nothing crazy, but I do prefer to at least have a 3-to-1 risk to reward on my trades because that will help keep me profitable longer, even in losing streaks. So I took a bit of a long right there. I ended up scalping another long off of the demand zone here because what I noticed was our pre-market low is sitting at 57.79, which is exactly at our demand zone. Now, the reason I didn't take this trade right away is because we had news. So today we had, if we check our economic calendar, we had ISM PMI. That is a huge report that we want to keep an eye on. This is the non-manufacturing ISM report on business, and it's based on data compiled from purchasing and supply executives nationwide. So we want to make sure that when we are on TradingView or trading at all on any platform, Benzinga also offers a great economic calendar. We could see what reports are coming up and know when to not trade. Because when we have a report like that, and let's take a look at the 1-minute chart, we get a crazy impulse move. Look at this. This is our 10 o'clock candle. And in just 1 minute, the ES moved almost 35 points. No strategy is going to let you catch this. We don't want to trade this at all. Even though, yes, we were coming out of demand, we have to remember when it comes to news or some type of data event, it's going to impact the market way more than any zone or price level that we have. We ended up finding our orb. Now, our orb is the opening range breakout. And the way to find that is you're going to use our 15-minute time frame, and you're going to mark out the high and the low of the first 15-minute candle of the day of the New York session. So same thing, I could use my my statistic tool and say, okay, well, how often do we have a double break? How often do we have a breakdown? How often do we have a breakout? And I noticed that the past 5 trading days, more likely we've had double breaks or a breakdown. So that tells me, in general, probably looking to be a bit more bearish here. Now, when I do take my trades, I'm not using my statistic-based platform. That's when order flow comes in hand. And that's when I love to use this tool. It's called bookmap. Now, take a look at bookmap. What it shows is it shows the level 2 in time in sales. And this has been a phenomenal tool for my trading journey, along with other traders that trade with me. If you do want to live trade with me, guys, join the community Bullish Bears, bullishbears.com. I do pre-market preps every morning. We go over some potential setups, key levels, and what trend the market is in. But as we see with bookmap shows us a visualized volume of our time in sales and level 2, and also the depth of market. So the current order book is where we have our passive or aggressive orders. Now, right down here at 5750, we have 348 passive buyers. Now, if we're below price, this is passive buyers. If it's above price, it's passive sellers. I use this along with the session volume profile to look for areas of imbalances. This is low volume areas. And I also like to use the session range volume delta. So this gives me the same information as the volume does, except it's only showing me the delta. So that would give me an idea if, okay, well, let's take a look. We have more aggressive sellers at this high volume point than we do buyers. We have negative 500, negative 430, negative 230. And the biggest buyer we really have is maybe positive 320. And then it goes right back down to negative 730, very high negatives, very low positives, which would then keep us in a bit of a bearish trend, right? We want to trade with the volume. Now, something I also noticed was check out up here. This is where our point of control, which is the yellow level, that's where a majority of the volume was traded that day. So with the point of control, we see above our point of control, we have a lot of strong aggressive buyers, but the volume doesn't really match up. Where we have strong aggressive sellers down here, we have some good volume. We have strong aggressive buyers up here, but the volume wasn't picking up to the 6,000s to the 8,000s like we saw over here. Therefore, there might be aggressive buyers, but they weren't strong enough to support price. We didn't have enough volume to continue in that direction. And that's just one way I like to use bookmap. It is a fantastic tool, and I use bookmap along with my supply and demand, support and resistance, or my orb, which is the opening range breakout, to help confirm that volume is in fact pushing or holding my levels and zones. Guys, don't forget, last time I'm gonna mention, fill out that form in the bio for a chance in the comments for a chance to win a free Apex Trader fun evaluation account. Really great stuff. You can pick any account size you want. Let's show you guys Apex Trader funding real quick. I'm going to show you guys some different accounts and how you guys could get started. So total compensation to customers, $423 million. The 80% off evals and the other sales that I mentioned before, they are running for another 8 days. So it ends in 2 Wednesdays. Ends in a little bit. Ends, I think, next Thursday at midnight. Now, when you do get started with Apex, you're going to scroll down and check this out. This is brand new. They've now introduced wealth charts plans. So the wealth charts plans, rhythmic plans, and Trade-Ovate plans. Now, I usually recommend people to maybe get started on a Trade-Ovate plan because then you could link it to your trading view. But wealth charts, now that they introduced wealth charts, this is very new. Like, this is the first time I'm seeing it on their website. So definitely interesting. Wealth Charts is sort of its own charting platform. So it's like a combination of Trade-Ovate and TradingView. So it definitely depends on what you're interested in and which charting platform you like best. But let's get down to the account sizes. And I want to show you, I mentioned earlier, why I wouldn't really touch an account these big. Now, if we're looking at the 50K accounts, we see that profit goal is 3,000. Trailing thresholds 2,500. They're pretty even, pretty one-to-one. You look at the 100K account and it doubles your profit goal and it barely moves your trailing threshold. So at that point, you really might as well just go for the 50K account. It does not make that big of a difference of the max payouts too. Now we go over to the 150K and same thing, right? Now we're looking at this 150K is triple the size profit target of the 50K, but it's only double the size of the trailing threshold. So you really have to adjust your risk management properly depending on which accounts you're trading. All right, let's see. If you guys have any questions, please let me know in the comments. I hope you guys all have a great rest of the week. Make sure you take trades that are with your plan. Make sure you have pre-market plans in the morning, and make sure that you're not just trying to stumble or have FOMO into trades. We don't want to have fear of missing out because the market's not going anywhere. The market will be here today. It'll be here tomorrow. The market is staying put, I promise you. And if you think, oh, well, I just missed the biggest move ever. Look, we started moving out of this demand zone. I should have taken a long here. We have to remember that coulda, woulda, shoulda is not part of our system. Part of our system is if we close above here, I'll look for this to happen. And then if this happens, that will be my entry. Then if this happens and that's my entry, this will be my stop loss and this will be my target. When we're able to define our system, that's when we're really able to stay on a strict lane in our trading and really see profitability and more consistency. Because if you're just trading the orb one day, the gap fill another day, supply and demand another day, you're going to have trouble journaling. You're going to have trouble finding what is consistent for you. And it's going to make your trading feel endless and like you're running in circles. But if you take a little extra time in the morning to do a pre-market analysis, if you take a little extra time afterwards to see, okay, what strategy did I use? And even take some time in the afternoons to really write down what your trading system is, what are your favorable setups, and what market conditions hit those setups perfectly. That's how you build a system, and that's how you're able to refine and define your trading. I hope this video helped you guys. This was a great episode. Don't forget, fill out that form in the comments for a chance to win a free Apex account. Join me next week at 11:30 a.m. Eastern for another Futures Fever segment. Take care, everybody, and happy trading.